Welcome to the show. I've got one of my good friends in the back green room getting ready to come out. We're going to talk, debate, question about, is the 4-year cycle broken for Bitcoin? I don't know that we agree or disagree. We haven't prepared this content. We're going to go at it and review the topic because it's an extremely important question that we all need to solve, because if the 4-year cycle is broken, then we may just be in an endless crypto summer. We might avoid the winter. Now, I don't think that we're going to avoid a major pullback. I'm going to break down some of the dynamics to you. I'm going to give you some fresh technicals on Bitcoin. There is embedded in this video a very strong opinion about what's going to happen next for Bitcoin and the alts. It's basically a little bit of good, a little bit of bad. I think in this year, it's still potentially going to be good, but we're definitely at a pivot point or a decision point for Bitcoin. I'm going to take a sneak peek at the SPY and NVIDIA. And you might say, well, why are we looking at the SPY and NVIDIA if this is a crypto video? Because if it's true that Bitcoin has broken the 4-year cycle, then it's all about the macro, and about the only thing that's keeping the markets up right now is the AI story. So as NVIDIA goes, so might Bitcoin go. So let me bring on my special guest. This is the Stocks with Josh show, and I got my buddy. You think it's Mark, but it's not. It's Tim.
What's going on, everybody?
Tim, tell everybody about your YouTube page.
Yeah, no, so some of you guys will remember me. It's been a little bit since I've been on here, but we used to have the channel Investing Bros. Same channel, same team. Everybody's still there. Changed the name of the channel just to Tim Warren. Had some wisdom from some people we really love and appreciate. Just said, hey, it's time to make a change. A lot of people, when they heard the word or the name Investing Bros, it sounds like a bunch of frat guys who are degenerate gamblers get on a live show and just go crazy with it, which I would like to think is kind of like the exact opposite of who we were, who we are. And we are very concise. We don't like crazy small picks. We like picking safer returns on investment. Nothing safe in the world of investing, but we like looking at the ones that have volume, they have sentiment, they have news. You can kind of get a grasp on them and what they're going to look like in the future. So it was time for a channel name change, but everything else about us is the exact same. So we're still thriving over there. You can find us. Just type in Tim Warren and I should pop up for you.
And that is who is in front of you right now, Mr. Tim Warren. And he's going to be taking a side on this debate. Let's bring in another guest in name only, and that's Michael Saylor. He's not here today, but he does have an opinion on this subject. And I'm going to start off with his opinion, and I'm going to let Tim get a reaction to it. I'm going to get into those charts today. It's not going to be a heavy charting today, but I'm going to keep it simple. And that's how I win, is by believing the charts and the price action in front of me. Price action is truth. The wicks express the emotion of the market, and volume tells us whether the market is lying or telling us the truth at the moment. So Saylor's take on the 4-year cycle, he has said these two things, and I quote, "The halvings still symbolize scarcity and price compression." Okay? So he has acknowledged that the halving event is still relevant to the idea of price compression and the story of scarcity. I would say, though, that he says that it symbolizes those things, not necessarily drives them. He has also said that the crypto winter is not coming back. Now, I'm going to take the lead on responding to Michael Saylor by saying this. It is possible that Bitcoin is absolutely becoming a mature asset, and that has good news and bad news. The bad news is if it becomes a mature asset, then we're done with these 200% and 300% pumps potentially. That's what mature assets do. They have less price fluctuation, right?
Yeah.
Volatility. Forgive me for stumbling on that word. So that is, if it's true, it might mean that the price movements are not as severe. And then so that's one dynamic. The bad news of it is that the price might not move as much. The good news is that we could end up in a longer trend moving higher. People have been talking about this idea of a super cycle where we get all eyes on it, institutional eyes on it, and it basically has just a mega breakout. So real quick, what are your thoughts on what Michael Saylor believes, and how would you say it differs or aligns with your view, Tim?
No, first of all, everything you just said there, I think it's a very good point. I'm going to take the side here today for the sake of conversation, which is always great to have with you. I'm of the opinion the 4-year cycle is done. I have a list of reasons and arguments as to why. We actually just put a video out on our channel last week. I think it was a Saturday video that went out, and I went through all the reasons why I believe it's dead and gone. Michael Saylor is right when he says that the halving event is significant for price action, 100%. There's a finite amount of Bitcoin that are ever going to be created. We have another 100 years, pretty much. I think it's a little less than 100 years, but it's around that time period to print about another 1.1 million of the total 21 million tokens. So that whole concept of, hey, we're going to sparse this out over an 110-year period or more, starting back in 2009 when Bitcoin was created. There's only going to be 21 million. Every 4 years, we're going to make it harder and harder by having the rewards per block mined. Brilliant. It's one of the reasons why Bitcoin is taken so seriously, especially in the last couple of years. It's digital gold. It picks up right where gold started to begin to have some flaws. Clearly, gold was the normal currency for thousands of years, but there were certain details, certain problems with it that humans exposed. Bitcoin comes in and it solves for all those problems. And so the halving event is still significant for long-term price action. But up until this point, the 4-year cycle ultimately it's a whole theory based around the significance of the halving events. That significance is, in my personal opinion, and I think Saylor thinks the same thing, the significance is just gone. It's no longer as important as it was. And we're going to keep talking. I have so many other reasons for thinking it's going to be that way. But something you said, Josh, I also would agree with, because you kind of sat there and said, if it's true the 4-year cycle is over, so are the days of the extreme volatility. I 100% agree. I've said before, people need to be prepared. On the good side, I don't think we'll ever see Bitcoin retrace 70% ever again. The reality is, I think the next bear market, whether it happens sometime in 2026 or 27 or 28, who knows when it happens, 50%, maybe. I think that's going to be the biggest it falls back. But like you said, without major corrections, you start to get rid of the major upside movements as well. Gone are the days of Bitcoin going 10x in 1 year. I think it's going to get to a point where don't even expect to 2x your Bitcoin investment every single year. It's going to take a while. Once we get up towards 200,000, which I think is a level to watch, it might take some time, maybe a full year before we're at 400,000. And then it's going to take some time before we get to 800,000 and then 1.6 million and then 3.2 million, so on and so forth. I think Bitcoin's going into the millions, but be prepared for it to take a little bit more time than next year. Some people are acting like we're going to be in the millions by next year. I think that's a little unrealistic. So you got to take the good with the bad. When you start to make these predictions that we won't have this extreme volatility anymore, that's good in the sense of when you have the bad days. It's bad in the sense of one of the reasons people love cryptocurrency is because if you time it right, you can make a whole lot of money very fast. That's what volatility is. I think those days for Bitcoin specifically are going to be gone. Altcoins, on the other hand, I still think there's still a lot of ups and downs, some major swings and potential to make some big money over the next couple of years.
So the alts did have a little bit of run, but I would say that a lot of people are still waiting on the altcoin season. Now, this show is going to be about the Bitcoin halving cycle and whether or not it's intact. But let's take a couple minutes to talk about the altcoin season that some feel never came. If the 4-year cycle is broken and institutions have moved to adapt Bitcoin and it's changed the game, the other dynamic that we've all tracked in crypto since the beginning is that the money flows typically when the Bitcoin season is over and it's reached its peak fever pitch high, the money flows out of Bitcoin and it would then roll into some of the lower cap assets like Ethereum, right? And so after Bitcoin peaked, then you would all of a sudden see a conviction of selling and money flooding over into Ethereum. And then Ethereum would peak out and have its sort of maybe its parabolic run for the season. And then it would begin to fade. And then the alts would pump for a very short amount of time. And it used to be that after the alts, you'd start getting some of the micro caps and then some of the meme coins. But this time around, we got two things. We got Bitcoin and Fartcoin. And they ran together. And the alts did come up off their lows, but really not the participation that a lot of people had thought might happen. And so that's another bad news potential that could come if we all agree and it proves to be true that the Bitcoin cycle is broken. It could be that the flow of money isn't there. Now, the other dynamic regarding the altcoins, and I'd love to get your opinion on this, is that the market has finally accepted Bitcoin. And there has been a recent move. We see Tom Lee and the boys are getting on, trying to do the same thing with Ethereum that was done with Bitcoin. And they've just put a ton of money into it. But as we get further away from Bitcoin, you've got Wall Street saying, I'm not quite sure about these other assets. And so we're just going to play with Bitcoin this season. And this other tech might need to develop. It may not be as relevant as some people think. It could be that the only thing that blockchain, as it relates to these types of technologies, is really a utility. It's going to be like the wires running the wall. You don't sit there and think about whether the lights are going to go on. It's just something you take for granted. It's part of, you could say, the AI tech revolution. Blockchain just gets absorbed into it, and it's not. You got companies like Meta and all these banks creating their own stable coins, creating their own connections. And it's not so much that one blockchain like Sui or Link is going to somehow emerge and become as relevant to the global marketplace as some had hoped. What is your opinion as to why the alts have not? I know that the alts have participated. They've come up off their lows. But, I'll tell you that a runaway train that I used to feel in the last cycle on Solana, I can't say I felt that one time. I feel like the train's been moving slow enough that I could run up and jump on board. It felt like more like a trolley than a runaway freight train. What are your thoughts on altcoins and why they haven't participated as much as folks would like?
Yeah, I think there's a couple factors, and we can talk more about that during the 4-year cycle. The timeline for the altcoin season should have been last November. And there actually was a little start. The Bitcoin dominance started to fall last November of 2024. Altcoins began to run, and then it fizzled out. Bitcoin dominance took back over, went to new highs at 66%, and that was that. And what we're seeing right now is the first actual, if we go to the charts in a little bit, we're seeing actually the Bitcoin dominance chart begin to tell the story of an altcoin season coming. I think it can still happen, but I think the biggest argument is going to be everything in crypto up until, let's call it like a year and a half, 2 years ago, was driven by retail investors. Yes, there were whales involved. Michael Saylor and a couple of his friends started getting involved back early in 2021. I think some of them late 2020, Elon Musk in that group as well. But there weren't massive institutions getting involved. In fact, institutions started to play a game there during the summer of 2021 where they were really involved in manipulating to keep prices down. That's a whole different conversation. But the reality is this time, institutions, rather than being either not just sitting on the sideline, not fighting against cryptocurrency, they're actually beginning to play in it. And because of that, Josh, I know you know this. We tell people all the time, you got to make sure you learn the game that the big boys play, the institutions play. I love the theory from Richard Wyckoff called the composite man theory. This concept that you have to treat all of the large players like they're one singular entity. And when I say the large players, I'm thinking about the BlackRocks and the JP Morgans and the people that own media, and they own social media, and they own how people's moods swing all the time. You have to imagine that composite man is constantly working in a way to benefit himself at the expense of the retail investor. What does this mean? They will decide, hey, I want to buy this asset. Let's say it's Bitcoin. I want to buy Bitcoin. What do? We need to get a feeling of pessimism into the markets. We need to discourage the retail investor. So let's use our media outlets and let's promote, let's talk about how bad Bitcoin is right now. Let's talk about the major selling. Let's find a kernel of truth in a story and amplify it to make it sound like it's way bigger than it actually is, convincing retail to enter sell orders. What do? We buy up that dip. I'm the composite man. I buy up that dip and I take price to the upside. All of a sudden I get into profit and it's like, okay, this is good. I want to take some of this profit. I want to make some money here. But if I just enter a sell signal by myself, there won't be enough liquidity up top. I got to find a reason to get people to buy up my selling. So now I'm going to take that media and I'm going to say, like, let's pump bullish articles. Let's get people feeling really good. Let's get a bunch of suckers from the retail spot to come in and buy our bag so that we can dump on them, get profit, bring the price back down, and then buy the dip. That has been a constant game happening throughout this entire bull run. And I do think it's a bull run, but I've seen time after time, Josh, I'm sure you see it too. This is the ugliest bull market ever. This is frustrating. When is it ever going to happen? Everything's broken. If you are finding yourself getting frustrated and bored and impatient, you're playing right into the hands of the game plan of a composite man theory of how to get the massive supply of an exciting asset.
First of all, I loved what you shared. That's a deep answer. Sometimes, we talk about this in an institutional way or like pros. And I think that a lot of people are like, they're looking at us like, okay, what's the simple answer? Thank you. I followed what you said. I want to really do like a rapid fire and keep it super simple. I'm going to look at some other things real quick, and we're going to come back to Bitcoin. And this is an interesting comment or question. Invest with Ryan said, Josh, didn't you say that an early sign of crypto winter being around the corner would be when MicroStrategy sells off before Bitcoin, aka the institutional selling early? Now, the logic behind that idea is that because MicroStrategy is sort of a leveraged position on Bitcoin, that we would see it as a higher risk version of Bitcoin, and the higher risk assets would get profit taking before ones that might be a little bit more stable. So people would have less tolerance for holding on the any type of downturn in the market. So let's just quickly go, and I'll get your reaction here in a minute. Let me pop over to MicroStrategy, and I'm going to make a point, and this point's going to be similar to my charting on Bitcoin. We're looking at monthly candles, and this isn't a special Bitcoin concept. This is basic candle theory, and I want to point out a couple things. So this candle, this was the big pump on MicroStrategies. Three horsemen, three green candles pushing up higher. This last one having price expansion means that the bears just ran away scared and this thing pumped, okay? But then it got a pretty healthy seller's wick on it, and it created sort of a all-time high, and it faced a number of months of a cool off, right? And now this is very important because this price point right here where it closed on the monthly time frame, that becomes sort of the historic resistance. Two resistances, that one there and this one here, okay? So this is the first one that if MicroStrategies was really getting ready to go much higher, the very first resistance to bring back this bull moment that we had, this continuation of the bull moment, would mean that we would have to close a monthly candle above that. Now, interestingly, we did that. We got a little candle, but it was a doji candle. It's really not the type of candle that you want. Down here, we had volume shrink, and we didn't have volume pump and price expansion at this area of resistance. And so instead it faded. And here's a point I want to make. And I don't know if I'm doing what I just joked with Tim that he was doing, giving you guys too much at one time. But here's what happened next. So when we got this little doji, we fell back beneath the 5 EMA. Now you can always use monthly candles with the 5 EMA to get a big picture view of where something is going. And as soon as price crossed beneath the 5 EMA right there, it also broke the previous 3 candles. It's gone into a bearish trend. And then, even worse, this candle opened up underneath the 5, which means that this needs to hold ground and recover very quickly. Otherwise, it's sort of signaling a bigger breakdown. And you're going to have different support levels along the way. But the reason why I mentioned that is this. We got to the place where the renewal of the pump story should continue. And instead of that up move continuing, we got back up there and it faded. And so, it does appear that this has had an incredible run, and people are they're not panic buying. They're consistently selling resistance. And so let me just take a pause on that and ask I'm going to go through a couple more charts, but I'm just curious of your position. So first, the logic. People are going to unload higher risk assets as it relates to Bitcoin before maybe selling their actual Bitcoin. So the leveraged Bitcoin positions will be unwound as an early signal that Bitcoin itself may be coming to a slowdown. And it would be true also if MicroStrategies was pumping right now, it would be indicating that Bitcoin was lagging, it would be indicating that Bitcoin would follow, right? If people were willing to take a 2x version of Bitcoin, then they'll pile in some money into Bitcoin itself. But, you know, to me, the MicroStrategies chart has just broken down. It's in a bearish spot. It's not pumping. Volume dried up. Where are the buyers? It's September, okay? So what are your thoughts, Tim?
No, I think, first of all, let's not argue with charts. If charts are going to say something, let's listen to them. Not that charts are always 100% correct, but ultimately it's about playing the odds, and charts are right more often than they're wrong. It's not a good looking chart, MicroStrategy. You laid out a lot of things there. I know I go really in depth, as you point out. I go more complicated a little bit of times. I'm going to save the listeners from my complicated TA and just let you know my TA is right in line with what Josh is saying. It's not a good looking monthly chart. The only thing that I would say to be careful and be prepared is MicroStrategy's chart has not always been tied to Bitcoin's price. So there's times where the chart can get overextended or underextended, and it's not telling the full story based on historical movements. The last time we had a sell signal on a bad-looking monthly chart, you'd have to go back to 2024, and instead of making a major correction, we just kind of traded sideways that summer. And then even though we had a sell signal on the monthly chart, even though we had bad-looking candles, we took off when the pump happened to everybody. Donald Trump was elected president. People assumed this was going to be very good for the economy. Crypto pumped, stocks pumped, MicroStrategy pumped. And so there are things that can happen that can make things not go their direction. But I say all that to say what Josh is saying is 100% true. That is a bearish looking candle up top there we just had. There is a sell signal right now on the monthly chart. There's a sell signal on the weekly chart. I think it is not unreasonable to think that MicroStrategy, at the very least, according to a weekly chart, probably needs to cool off back down to $300. And whether we stop there, whether we keep going, that's a different question. I think the first question you asked me, though, Josh, and reiterate it if I'm getting the question wrong, but you're saying, what are my thoughts about that record of saying riskier plays of Bitcoin could show us early signs that Bitcoin's price could be in trouble? Was that the question?
I'm just making the comment that the 2x leverage position of Bitcoin will unwind before Bitcoin itself because it's higher leveraged. It's no different than small caps not running, because they're higher risk in a high inflation, high rate environment. If rates came down, then we can assume the small caps would run because there's higher risk because they don't have no cash. And the reason why all this money piled into big tech is because in this environment where the M2 money supply has been shrunk because of high rates globally, then people didn't have access to money, which means that their profit is harder. They got to run their businesses way better. And we've seen a lot of businesses not being run well. For instance, Target, right? And some of these other companies that have been taken out to the woodshed and punished, Lululemon and Nike. It's like you got to really be advancing profits and earnings per share for your stock to be rewarded. And as soon as you get into a money supply shrink environment or quantitative tightening, then you got to expect stocks to go down. Let me just quickly jump over to the Bitcoin chart. I'm going to make a couple important points. And this is probably what you showed up for, was my opinion or my prediction as to where Bitcoin will go next. And truth be told, I just gave it to you with MicroStrategies. It's fading. And so we're in the month of September. And I think it would be extremely successful if it just held support. But the most important thing is volume is fading. Okay, so at resistance, this is so basic. Okay, so if you guys are ever going to get yourself positioned as a charter, as a master of charts, this is the idea right here. When you move to resistance or to support, when you get there, you either have to get a pump in volume pushing you through resistance, or you have to see, and that's called breaking, change of character. The character was it would likely get rejected because it was resistance. The change of character is that now all of a sudden what used to be resistance, what used to be considered a premium price, is considered cheap, and the buyers flood in at resistance. That's a change of character. Now, we just looked at the MicroStrategy chart, and that was not the case. We got right back up to resistance, and price action respected resistance. It stopped pumping, and profit taking ensued, which meant that everybody believed that there's time ahead to get a better price, which means that we're going to get a better price, which means it's going to come down. Now, a macro event could occur. I don't know. China and the U.S. come out with a trade deal earlier than expected. But really, it looks to me, I'm not going to get into politics at all, but we got President Xi and Kim Jong-il, I think, and Putin over there having, slapping each other high fives. And, the deal with India seems to be under a lot of pressure and breaking down. And, it's a very important deal for the United States. And you got those folks over there really rallying together. So I don't think that it looks like we'll get a shock, surprise India or China deal this week. And since we're in the month of September, and since the market already just told us by selling off MicroStrategies at resistance, it means we likely might have some trouble holding resistance on Bitcoin right now. And I'm going to take you into the chart, and I'm going to show you the exact trigger and the exact support. And I'll get Tim's opinion, see if he sees the charts incorrectly or correctly like me. I'm just messing around. Let's pull these up. So I'm going to keep it simple, and that's how I succeed. If you guys trying to figure out how do I get things occasionally right, it's because I keep them simple and I believe the charts when I see them. Monthly candles. Okay. Now you see that I have an ascending channel. I do believe that there has been an ascending channel that we are in, right? And we're kind of, we're in that channel, which is bullish until it breaks to the downside. And now we want to do something. Okay. We got these monthly candles. Why do I have 107 marked on my chart as a trigger to the downside? If we turn on the EMA and we go back to the concept of monthly candles with a 5 EMA, you can see that we're actually doing pretty good, okay, in that we are above 107. If we cross beneath 107, then we have sort of broken the current uptrend. And this is the most important thing. Down here, this candle was our price expansion candle, very similar to MicroStrategies. You see that huge volume node down there. We had increased volume and price expansion. And ever since, we've had price compression and we've had volume decrease, okay? So we've moved up, but on much less volume. And so here's the concern. If in the month of September we lose 107, we lose the 5 EMA, we got to keep it super simple. It means we're going to break down and see some more selling pressure to the downside. And I'm going to tell you the very next thing I look for. And you guys are like, Josh, your charting's too simple. You see these candles back here that have the big buyer's wicks on them? This price sort of fell off a shelf, and then all of a sudden, buyers came swooping in. Well, that's kind of what I'd be looking for here. If we do end up losing 107, I would expect there to be some panic selling and a flush, and it has to leave us a great big wick. And that would then indicate, and then really it wouldn't even be a buy again until we got back above about approximately 116. And so I would say that the big problem in the market and the warning as to why I am not going long, I just sold a bunch of alts in deep profit today. So I had some really nice profits because I was buying the recent dip here. And I'm going to wait because I think I might get a better price. Now, there's no guarantee. You got to do your own due diligence. But if we lose 107, the next big support level is $85. And you say, well, why, Josh? Why is $85 the next big support level? Well, let's go look at it. Keeping it really simple. 5 means we're pumping. As long as you stay above the 5, the bulls are in charge. If we lose the 5, of course, there's the 10. I'm not saying we couldn't come back and hit the 10. But if we lose the 5, if we go back to 2021, you can see that we did something very similar. We got close to the 21-day moving average. We had another pump up. Then eventually we came back and hit it, right? And so we had this huge pump up. We moved back. We didn't quite come back and hit the 21. We moved up, made a second high. And if we lose the 5, we've got to consider that the 10 and the 20 are the next target zones. And so, why do I think that could potentially happen? And I'm going to say this real quick. Because of volume. Remember what I told you, price is truth, but volume is the confirmation of that truth, right? And so you want to believe the price in front of you. We are, according to Bitcoin, above the 5, which means the bulls are completely in charge. But we just made a push for the all-time high. And instead of getting there with price expansion and volume increase, we got price compression and volume fall off. That's the opposite of what you need to see something go up in value. So I'm going to stick with that. I'm going to be watching that 107 very carefully. And here's, so 107, I just told you that it's the key support for the bulls. So if we come back to 107 and we see a massive pump of volume, that will immediately change my tune. And I'll immediately notify you guys. I'll be like, wow, guys, did you see this incredible weekly volume at 107? That's a sign of reversal. I'm buying. That's what the Stocks with Josh Pro Trading community is for. If you guys don't know what that is, that's my personal trading community. You can go to the link in the description of this video and you can join. We live trade. Today I live traded with the community. We took 5 trades. 4 of them were incredible winners. All of them had some pretty good gains. I think it was 8%, 8%. And then we had between 30 and 40%. And one of them we had probably a 6 to 8% loss on. A great session, right? But I will be letting you guys know if we don't bounce with volume at 107, it means we're going to have a deeper pullback in the month of September. And that drives us to this point, Tim, okay? I would agree that the Bitcoin chart looks really healthy, and we're moving towards quantitative easing and rate cuts this year, and possibly more in 2026. And so the likelihood that we're going to continue to see this bought up, the likelihood that retail will get shaked out and institutions will keep buying the dip, I think that's going to keep repeating, right? And so overall, I'm bullish on Bitcoin. I am not convinced that the 4-year cycle is over. I think it's become less important.
Okay.
And I think that when we get out of a bullish macro moment, so when the macro changes and the overall market's pulling back, people are going to be saying that the winter is back. I think that every stock has a summer. If it's not dead money, every stock has a summer pump and every stock has a winter move. We just saw that with NVIDIA here in the last couple of months when it went all the way down to sub $90. And everybody was saying that it was over. The AI bubbles popped. And then the thing rocketed up $100. I think the same thing's going to happen to Bitcoin. We're going to see it pull back in a healthy way. And we're going to see it make another leg higher when people aren't expecting it. What are your thoughts on the Bitcoin chart I just shared and your own personal opinion? What are you buying? Are you buying, holding? What are you doing right now? Do you think we got upside ahead, or are you waiting to add in September?
Yeah, I mean, I'm very bullish. I'm cautiously bullish. I definitely let our community know all the time, like, hey, there's never a guarantee about anything. Nothing's ever 100%. I could line up 100 arguments over here to say I'm bullish. I could line up, I don't think I have 100, but I probably have like 5 or 6 arguments to be bearish. I don't have all the same exact levels you just gave, but 107 actually is very significant. We actually had, we don't like using the word perfect. Occasionally, though, what happens, we had buy orders on our BloFin account at 107,200. BloFin hit 107,195. That's about as close as you can get to perfect on a Bitcoin spot. Is that the official bottom? We'll have to wait and see. I think there's some great news coming out right now. I think more good news is coming. Of course, on Friday, we get the official unemployment numbers that the Fed will use to determine if they cut rates or not. On the 11th, we get the official inflation data. Everything right now, I think CME is a 95% prediction of a rate cut in September. Polymarket's 86%, I want to say, the highest we've ever seen. So everything's pointing towards that bullish side. If we lose it, though, I had levels closer towards somewhere between 97 and 92,000 for Bitcoin based on a weekly sell signal that is still in effect. The problem is I tell people with the sell signals that I use, the times that they work is during boring or bearish seasons. Okay. The times they don't work is during a roaring bull run. So that's what we're kind of in question right now. There's a sell signal on the weekly chart for Bitcoin, but if we get a rate cut and if the markets respond by saying that's our cue, we've been waiting all of 2025 to get that, it's time to start buying, then we enter into an extremely bullish season, in which case weekly sell signals get ignored like they were back in August of 2020 or January of 2021, where we also had weekly sell signals that were ignored. So that's the big question for me at the moment. When it comes to the 4-year cycle, I have a clarifying question for you because I was a little confused by something you said. So help me out. 4-year cycle, or maybe disagree with my assumption here. The 4-year cycle would imply that sometime late September to potentially late October should be the top of Bitcoin. Now, if the top's in right now, I would say, all right, sure. We'll say the 4-year cycle it ended a little early, but it's within, months of being okay. But the concept of the 4-year cycle would suggest sometime late September to late October should be the top of the Bitcoin chart, and then probably altcoins as well. And then if the 4-year cycle continues, we will enter a year-long bear market. It's somewhere between 55 to 60 weeks of bearish pressure. It's been the cycle back in 2017, 2021. So effectively, we would be starting a bearish movement on Bitcoin until next fall of 2026, in which case we'd bottom out. It'd be the perfect time to buy. And then we start the very long, slow 3-year bull cycle all over again.
Yes, that's a good description of it. Go ahead.
That I completely disagree with. I don't believe that is going to happen. Now, if you told me, Tim, do you think that Bitcoin could hit a new local top and have a correction sometime late September or early October after a big run due to rate cuts? Absolutely. I actually am.
I don't think. Hey, can you repeat that? I don't think I followed that last question.
So if you asked me, Tim, do you think that there will be a local top, right? So if we say January of 2025, it wasn't the top of the bull market, but it was a local top. March of 2024 wasn't the top of the bull market, but it was a local top. Could we get another local top like that with a multi-month pullback? I think the answer to that question is possibly yes. I'm not guaranteeing it, but I think that is something that absolutely could happen. Where I'm going to say the 4-year cycle is dead, though, and this will be the decider of if I'm right or wrong about it, I believe there will be a new all-time high for Bitcoin in Q1 of 2026, which would be
why Q1 of 2026?
Because I think that we're going to have I think there's going to be a local top for Bitcoin, similar, like I said, March, but I don't think it's going to take like 6-7 months. I think it's going to be a month or two long pullback. I think potentially November and maybe December. We'll have to wait and see.
Are you saying that Bitcoin will pull back in November and December?
So let me be very clear so I don't say something that's going to get copied. I'm not saying for sure that it will. I'm saying when we get there, I want to see the charts, and I will not be surprised if November is a pullback. Does that make sense?
I think I'm understanding only that you're saying that that we could make a local top in October and that we could fade in November and make a real final push for this particular parabolic move in the first quarter of 2026.
So I wouldn't call it a final. I wouldn't call it a final move. I think one of the best things I could do here would be to go ahead and share my chart and kind of talk through what I'm explaining right now. So if you want to share my screen, this should be the top. I'm going to put a line here. According to the 4-year cycle, again, sometime late September, and I'll put another one sometime between there and late October, right in here. This period of time should be the 4-year cycle top. Okay. I think what's going to happen potentially, I think we rally into this period of time somewhere.
And what's that window again?
September, late September. Let's call it September 29th.
Okay. Okay. Go ahead.
To late October, the 27th.
All right.
I believe that we will rally and put a new all-time high in Bitcoin in this time period.
Do you also, because I don't mean to cut you off, I just want to really process this for the people.
Yep.
If that's true, and the entire premise of Bitcoin of the 4-year cycle dying is that it's going to align with the macro market, are you also suggesting in September we're getting ready to pump for the SPY?
Right now?
Yep.
You know, I haven't done a whole lot of SPY analysis, so I don't want to say something irresponsible. I say just blanketly saying yes.
Would you suggest, I'm putting you on the grill. Thank you for being on the grill. Would you suggest that the SPY could fall and Bitcoin could pump in September, and why, if it's all macro aligned?
Because you even have, I don't know if you want to go off the screen for this part of the conversation. I think that crypto is in a spot where we've seen
we're not here to be friends. I am friends. I like this guy. But you know, he's welcome to grill me, and I'm doing a little grilling here. Go ahead, Tim.
Yeah. I think that there's a world in which crypto can rally when you don't have the stock market rallying. For example, during some of this pullback we've had on Bitcoin over the last couple of weeks, the stock market continued to go to the upside. So there's not this dynamic tie that they have to follow each other perfectly.
Well, there was always that belief that you know, Bitcoin would begin to act like digital gold, but you know, Bitcoin's come up, but digital gold or real gold, the yellow metal, it's screaming higher. So the yellow metal appears to still be king, you know, as far as overall market cap and as far as overall performance. So institutional buy-in doesn't seem to shift the story of risk. It's still being viewed like a tech, growth stock tech story. Sorry, go ahead.
Absolutely. No, and the reality is that that's how it's viewed. So you have to take that into consideration. But there are emerging voices from the institutional side that are kind of waving the flags of, hey, Bitcoin is going to be a bigger deal than you think. I mean, an analyst from JP Morgan just this week came out and said, Bitcoin dramatically oversold or underbought compared to gold right now. What's he saying? He's not saying gold's not good. He's saying, I'm looking at these two assets, one of them gold and one of them we're calling it digital gold, and I'm looking at them as fighting against inflation. And if you told me right now, pick one, well, if you're the type of investor who likes to take the oversold one, Bitcoin has a much larger upside potential than gold does. I mean, gold just keeps skyrocketing to all-time highs. Bitcoin's kind of fluctuating right now. It's hovering down low. It hit 124 a couple weeks ago. Now it's kind of back down. There are people that will look at that and say, all right, let me take some profit from gold. Let me take some profit from some of my stocks that are around or at all-time high and go into a better play that's underbought at the moment. That's when you bring in your Bitcoins. You bring in your altcoins. The institutions are really excited about the future of tokenization. Tokenization is where the altcoin game gets involved and has dramatic upside. So I don't want to sit here and say I believe the SPY is going to fall while crypto goes up. What I'm saying is I'm not watching the SPY chart at the moment. I actually don't know if you would consider, I could do analysis quickly, but I don't have a take right here and now saying the SPY is underbought or overbought. What I'm saying is that Bitcoin and cryptocurrencies are showing signs of waiting for that prick to the balloon, that balloon being quantitative easing. It's been a very slow, drawn-out summer for altcoins that have picked up more recently. But I've said since back in January, if you're looking for the altcoin season to happen, for altcoins to go berserk, we need to see a combination of regulatory clarity, which we're getting every single week about crypto's future. And the other thing I've been very adamant about is we need to officially step into quantitative easing. That means the money printers need to be on and we need to be cutting rates. And it looks like we're 2 weeks or more, or 2 weeks or less away from seeing that come to fruition.
I love everything you're saying. I want to narrow in on your point a little bit. Why is it that you think Bitcoin might pump in September? And I'm not disagreeing with you. If you actually think about what I'm saying, Bitcoin, I already said, being above the monthly candle, being above 107, being above the 5 EMA means the bulls are in charge. And so until the bulls relinquish price to the bears, I would agree that could happen. But why are you saying it might happen?
Simplicity, the rate cuts. I think the rate cuts are going to bring in a buying group. I think they're going to give optimism into not just crypto, but the economy overall. And you look at the assets that more recently are oversold. Those are the ones I think benefit. I think crypto fits the bill.
You know, it's funny that let me build on your idea for a minute. You know, we got the Fed is going to potentially give a rate cut in September, and when the Fed spoke, he came out so dovishly that the
Yeah.
likelihood of a rate cut jumped to like 95%. But then in the following days, based on some data that came out, it faded back down significantly. So people were beginning to doubt his dovishness. And so obviously they have their reasons for doubting, but if he comes out and he gives the rate cut and he comes out and repeats his dovish stance that he believes that inflation is under control, but he's more concerned about shoring up the economy and quantitative easing, I could see the market saying, hey, we got it wrong. This guy is, the market's not weak. We got great earnings, and now he's giving us some money. I could see the market ripping in September if that were to come to pass. I would say at the moment, the ball seems to be slightly out of Trump's court and a little bit more into the Fed's court here in September. So it'll be interesting to see. I want to go into the SPY real quick and make a couple points about the chart there and see if there's some confluence to what Tim is saying. We're going to look at volume in the SPY on the monthly chart. Just make a couple points. I think you guys can use it as a class. Okay, first of all, let's talk about this volume down here, okay? This looks like accumulation to me. That's what this looks like. And really, volume's been pretty steady. That's one of the reasons why I'm calling it accumulation, is that we don't really have volume fading as the SPY is climbing. So I like that, and I've been warning that as long as we can hold above 637.48, I think that the bulls are in charge and anything's possible. There are some other concerning things. We have this historic line of resistance, that we've been. This has been a line of resistance is established by, some people say 3 touches, some people say a minimum of 2, but we definitely have a lot of touches here. We've got 1, 2, 3. 4, 5, 6. We got plenty of touches on the monthly chart. And, this is an area where we need to see price expansion really, really soon, like in the month of September, because otherwise we hit this line, we faded from there. If we enter into the bear zone, anything beneath 637.48, then I feel we have to come back and test 610. But volume conversation does not look bad. When you go back here and you see we were making these all-time highs back in the day, volume was making a low, and then we got a massive red candle. Here, volume's really been staying up. It's staying up and building, and so it does appear as if we might be moving towards a blow-off top. And so I think if you take a step back and you look at what's happened, that bearish engulfing candle that we got on the SPY, that was the bears testing the resolve of the bulls. And the fact is, the bulls popped the price right above that engulfing candle, canceling it. And then we came back today and we tested it and we bounced again. So I think this week is going to be a very telling week. If we lose that level, I'm going to be sounding the alarms. And I'm not sounding any bearish alarms. Matter of fact, I've actually been sounding the alarm that you want to stay with the trend until it changes, and the trend is still bullish. It got tested. That test got rejected. The bears lost the battle. The bulls are still in charge of SPY and Bitcoin. And if it holds this level and we get a bullish catalyst, a surprise from the Fed, I don't think Trump's going to come through with the Trump put myself, but maybe he would. Maybe there'd be some crazy combination of the two. I could see things going higher in the month of September. However, you got that little bit of a warning from MicroStrategy where that higher risk asset, right, that 2x leverage Bitcoin move got sort of faded, right? So I think the market's waiting in anticipation. The SPY is still showing strength, not weakness, and Bitcoin hasn't failed just yet. Now, I said earlier that I locked in some profits on my position, and I can guarantee you, I would love to get a better price. I think it does appear to me at the moment that if we dip, there'll be a better opportunity, and I'll continue to go long because like Tim, I don't see Bitcoin breaking down just yet. And let me just take you, Tim, we don't get to chart with each other all the time. So let me just show you one of the points. I think you've heard me make it before, but I think it's worth making again. I have the logarithmic view of Bitcoin here. Kind of shows all the previous moments. The white dotted lights, the white dots are the halving events. And you know, one of the points I always like to make when I show this chart is that, you know, the original Bitcoin halving event led to a 60,000% pump. Then the following cycle, we got a 12,000% pump, which is really, really much less. And then we got a 2,000% pump. And then we recently got as high as a 700% pump. And so obviously price is maturing and straightening out. Okay. We're, you know, so that's a huge observation. Now, I've also made the point that when you look at the history of Bitcoin, when we've broken above the previous all-time high, so this was the high of 2013, we broke above it. These are fib levels, okay? We made it to the next fib level, okay? We made it to the 2 fib levels above, all right? And then in the last cycle, we broke above the previous all-time high set in 2017, and we made it to the next fib level. Now, we never had a candle open and close above this level. That's basic charting, basic breakout theory, and it never happened. So technically, anybody like me that understands resistance and candles understood that this was going to fade and that we weren't going to get to this level, okay? So then we got to this cycle, and we made a brand new all-time top right here. And we did something that we opened and closed monthly candles above. Now, if it could be that everything's broken, okay? But Bitcoin has never failed to hit the next fib level once it's confirmed above resistance. It's never failed. What is the next fib level? It's 173,000. So it's on the table. And I'll tell you this, one of my sinking suspicions, and I'll let you share some thoughts. Bitcoin's moving slowly, stair-stepping higher. And I think that it's reasonable for us to assume that even though I think the 4-year cycle will have some impact because it's essentially based on the halving event and scarcity of coins, and there are reasons why that will impact price. It's a catalyst event. Bitcoin doesn't have earnings, but it has less catalyst events. One of them is the halving event. And people, when it's on a downtrend because people have lost confidence and it just gets a series of bad news and the overall macro is horrible, it'll reverse because people will begin to look ahead at the positive catalyst that could turn it around. Greed will set back in and they'll want to lock their position in for the potential opportunity. It'll be buying when there's blood in the street. But what we've got is we've got an ascending triangle. It's very orderly. It's not like the previous cycles. It's slowly building and stair-stepping. And I do believe it wouldn't shock me if we continued to go up. If we hold above 85K all the way through the end of this year, I would say at that point that I would be 100% convinced that the 4-year cycle is off the table, or that its impact has been greatly diminished, and that we're going to have that 174,000 Bitcoin in 2026. So it's not so much, I can't predict. I mean, you guys see the way I chart. You see how I look at the volume, price expansion, the candles, support and resistance. I'm going to go by all of that. I saw a comment in here a little bit ago. Somebody said, "Oh, Josh, you made this prediction." I have made no predictions wrong. And I stand by it. I've got all the receipts, right? And what you might have thought is that I said, like, for instance, not too long ago when Bitcoin was 74K, I went on my show and Larry's show when he was dealing with his dad. I said, guys, this isn't over. We will get back to a minimum of 116 to 120. Bold prediction, bold and strong prediction. Where did we go? 125K. Okay. Now, someone said in the comments, well, Josh, but you said Bitcoin might hit 140, 150. It might. It's still in the hands of the bulls. Nothing's broken down. The Fibonacci would suggest that we are going to hit the top of that fib level, right? We're moving towards quantitative easing. Okay. So nothing's changed. We have to see how price action performs when it gets to these key levels. And 120 was a key level of which we have faded. Okay, and so until it recaptures, if it recaptures, then that 140 comes into play and higher all the way up to 174. So I guess my final technical point here is that the SPY looks better than Bitcoin. That I do believe that the catalyst of the Fed providing a rate cut, whereas the market seems to be doubting him a bit more after his speech than during his speech. But if we do get that rate cut and the rest of the macro environment stays relatively strong, then I think the market could continue to move. It's not broken down. I showed you guys the SPY. The SPY is not broken down either. We have a bear zone that the minute we cross into it and close, I will sound the alarm. For Bitcoin, the minute we cross underneath 107 and close, I will sound the alarm. Right now, the SPY and Bitcoin are in the hands of the bulls as of the making of this video.
Agreed. Yeah, I think I think what's going to be very interesting is, again, with the 4-year cycle as a whole, it's going to come down to, again, I like what you said. Hey, if we can hold 85 throughout this year, I think it has a lot more to do with, will we hit a new all-time high? If the 4-year cycle is still intact, we either already just hit the all-time high a couple weeks ago, or we might hit one more here, again, sometime late September, October, maybe extends into November. The reality is, this is going to be the important question. Do we get a new all-time high in Q1 of 2026? I think yes. If we do not, I think there's a very strong argument to say, all right, we got here differently. This was an ugly 4-year cycle, but it seems like the markets have spoken and it's still intact. I don't think that's going to happen, Josh. And you said it several times. We have been in a season now for quite some time. We are stair-stepping our way up. We're not being extremely volatile like the Bitcoin of the past. We did things in this cycle way before we've ever done it in the past. We've delayed things like an altcoin season like never before in the past. I think the future, honestly, will look like, you look at high levels, 140. To me, that's not that high, but 140, that's a new high. Then you get to that 175 level. Golden pocket, a lot of people are looking at. Then you start to cross into the big 200, 200,000, 300,000, 400,000, millions. Bitcoin's going to get there. For me, it's the question of when, not if. And ultimately, we have not moved explosively during this 4-year cycle that is 30 days away from supposedly being over. I actually see that as a positive. I see it as part of the evidence that this concept of the 4-year cycle working like a calendar clockwork, it's done. That argument is said and done. I'll run you through. I know I need to go here in a little bit, but I want to let you ask some questions. I want to read some notes. You don't have to go to my chart here. I want to read my notes.
Okay, go ahead.
You guys can watch the video as well over on my channel, but here's some notes that I have. Agree with me or disagree with me, but I'm just going to read them. Halving event is no longer significant.
What's that? Wait. I'm sorry. Can you slow down? What was that?
Halving event is no longer significant. That's my first argument. When it comes to cycle, the concept of halving events is a big thing, but we went from 50 to 25 to 12.5 to 6.125 to 3. The next one's going to take us from 3.1 to 1.5 something. The difference is so minuscule compared to the having significances in the past. The cycle also was always run by people like you and me, Josh, by the everyday person, why am I blanking on the word of it? The traditional trader. Institutions weren't involved.
Retail trader.
2021, institutions worked against crypto, against Bitcoin. They're now the ones that are going to be deciding when it's time to rally and when it's time to fall, not the miners. The miners used to decide it. Now it's going to be the institutions. That was my point number one. Point two, the timing of the 4-year cycle has been off since 2022. And I won't go into crazy things. All the details are on my video, but we had never hit a new high before the halving event. That happened in 2024. We always had an altcoin season 110 weeks after the bear market bottom. That did not happen. We had a fake out, and now we're coming into the end of the 4-year cycle supposedly, and it looks like we're on the doorstep of entering an altcoin season. That timeline was completely off. When you move into my argument number 3, the 4-year cycle theory is just that. It was a theory, and it never was officially a thing. I think I've said this on your show before, Josh, but the first time something happens, it just happened, right? You can't say there's an established theory there. You just say it happens. The second time something happens, like, okay, cool, it repeated. Is that a coincidence or is this a pattern? We don't know quite yet. You have to see something happen a third time to say, okay, we have a pattern. Well, the 4-year cycle, the first cycle was 2013 to 2017. The second one was 17 to 21. We needed to see 21 to 2025 play out to have our third repeated cycle. But as I just mentioned before, the timeliness of it has all been off. It does not look like we're getting a repeat of the first two times. And so for that reason, the whole cycle was off. Another coincidence about the bear markets that lasted a full year. This is where you have to start asking, well, if the 4-year cycle was never established theory, did we misread something? Was there a coincidence we weren't looking at? 2018 was the bear market. What also happened in 2018? Donald Trump was the president at the time, and guess what he did? He instituted tariffs that caused economic uncertainty. So did the 4-year cycle create a bear market, or did economic uncertainty create a bear market? Fast forward into 2022, we have another bear market. Well, what was happening in 2022? Inflation was sitting sky high. The Fed started waking up and saying, inflation is a major problem. We're going to have to start raising rates, interest rates. We're going to have to start increasing this, moving us into quantitative tightening, causing what? Economic uncertainty. So again, was it the 4-year cycle, or was it another major form of economic uncertainty that took us into a year-long bear market? What's crazy to me is that we just went through all of 2025 with economic uncertainty, and yet Bitcoin increased in price despite all of the FUD. Most altcoins are sitting at or above where they were earlier this year, which is a major sign to me of just how exciting. When we say that the institutions have not showed interest in crypto, I would beg to differ. We've been in an entire year of economic uncertainty that caused a 2018 bear market, a 2022 bear market, and yet crypto is rallying despite the uncertainty. Imagine what will happen when we get the rate cuts and we get certainty and we get regulation. Think about what if you could go back and invest in the early days of cell phones or the internet. Or you could go back and invest in Apple or Amazon or Google at the early stages.
Okay, I like everything you're saying. It's great stuff. Rich, I love it. I love it. I had to politely interject. We're not in the early days of this. This is a decade old. I listened very carefully.
I just want to know, I'm going to argue that in a second, but I want you to finish. I have a disagreement.
Okay. All right. I listened very carefully to everything you said, and I didn't really find anything I disagreed with except for one point that I would like to bring clarification to, which is that I do believe that we have a very established pattern on Bitcoin and that it does coincide with the halving events. And so I think I would like to state that we do have an established pattern. I would say that I'm entirely open to it being broken and for that to change. And I already agree. I would say 60 to 70% of me agrees that the 4-year cycle has dramatically lost its significance. I would just simply say about it that it does matter because it's a catalyst, and it's the type of thing that could turn the asset around in a overall pullback, right? It's no different than earnings. Halfway to earnings, people, and you got to remember, this is largely all about leverage, especially with a high-risk asset. It's people who are going long or people who are shorting. So we're going to be in the same situation. This is a low float, high cap. So this is high cap, low float asset that people love to leverage 100x short their Bitcoin. And as they get greedy and we get into a pullback, with the catalyst ahead of the halving event, people will begin to not be certain about its impact, and they will begin to close up their positions and buy. And then it shifts from a selling pressure to a feverish buying pressure as people get liquidated, billions and billions of dollars getting snatched away from people as the stock price shoots back up. So I know that there's a lot of people in here, Tim, that don't understand what drives things down as much as they understand the concept of what drives things up, right? And all of the market manipulation that pushes fear or greed. And the minute the market begins to break key levels of support, you're going to get the Jim Cramers say, we start talking about quantum computers breaking down Bitcoin, and they'll just be peddling fear because it's down, right? And so I agree with everything you largely said, except this point that I don't know that we have confirmation. I think that we have a pattern that has been respected, and because I am a charter, and I know you are too, but because I like to keep charting very, very simple, I think to say that the cycle is broken is guesswork. We don't have confirmation. Matter of fact, if you want to hit me with a technical answer, what would be your technical confirmation that the cycle is broken? I think you already gave it. It's that we had an all-time high before the halving. That was your largest suggestion.
Could I ask you a question? So,
Go ahead.
So what aspect of the 4-year cycle pattern has been in effect since? Let's see. The last consistency I saw was the fact that after you top out, so we topped out in November of 2021, you should expect a 1 year, roughly a little longer than 1 year, but roughly a 1 year bear market. Guess what? We did it. We didn't hit a bottom of the bear market until November of 2022. So at that point, this 4-year cycle theory is intact, right?
You're saying it is or is not? It is intact.
It is intact, right? So
okay, go ahead.
Of November of 2022, the 4-year cycle is intact. Great spot there. Now let's move forward. The timeliness from the bottom to the new all-time high for Bitcoin, we shattered it. We were way too early. It's supposed to be weeks after the halving event. Instead, it was weeks before the halving event. Next up, the altcoin season is supposed to be roughly 100 and I have the notes here. Altcoin season is roughly 110 weeks post bottom of the bear market. All right. And everything works in rhythms. It did not happen 110 weeks after that happened. So the only thing left that we have to wait to verify is the top of the bull market. But the new all-time high for Bitcoin was mistimed. The altcoin season was mistimed.
Well,
everything
okay,
so far has been mistimed since this November of 2022.
Okay, let me comment on one of the points you're making from a technical perspective by going back into the Bitcoin chart. Things are pretty messy. I don't want to get too technical and lose our audience. I want to keep things simple. But I would agree that we had this new high before the halving event. The halving event is marked in the white dotted lines, but we had a very similar price action event occur here where we had a very strong push before the halving event back in 2019 to 2020. Very similar. It just fell short of getting above the previous high. Matter of fact, it got to the bodies, it just didn't get to the wick, right? Which means this is not too terribly dissimilar to this pump that occurred here. We had the very similar number of months where we went sideways, very similar to this price action from March all the way to October of 2024. Then we had this follow through pump. The only real difference that we haven't had is that when we got this pump in the 2021 cycle, we really have failed to get that pump this time. So it's been much weaker. I would just say that I would say that all that really needs to break in my eyes for me to believe that the cycle is broken is our failure to get to that next fib level would really mean that Bitcoin is doing something it's never done. And if the next confirmation would be a failure to break down below the previous all-time high, if this acted more like, you might say, the NVIDIA chart, where it simply back tests previous resistance and bounces with volume, I would say winters are over. I just think that we don't have the technicals yet to confirm. I think what you described was differences that I could come back and say, well, it is different, but it's also similar to this. It's just a little different than that. I don't think it's a strong enough confirmation to definitively say the cycle is broken. But when you went through your notes and you listed off your core facts, I would say, other than that, I agreed with it. I agreed with everything you said.
Yeah, I mean, nothing's official until it's official, right? So that's one of the things I said earlier. I can't say I'm right. I think I will be. I can't say I'm right until we see a new all-time high in Q1 of 2026, right? Everything until that point is just my theory versus reality. My theory becomes reality if and when we hit a new all-time high in Q1 of 2026. That would shatter the 4-year cycle, a cycle that, like I said earlier, I think it's over. Even the analysis you just gave, and I'm not going to go in too much into it. I see what you're saying. I disagree still, though, because you compared this movement to maybe some similarities that we had between 2018 and 2021.
2019 and 2020. Yeah, go ahead.
What about if we were go back and compared 2015 to 2017? It doesn't look like that at all. So I don't think those moves that you paired it had anything to do with a 4-year cycle. I think those are more rhyming than 4-year cycle things. But let me go back to a different story, because it is good, by the way. We got to come back on, do more of these. I know people are loving this right now. People might watch this and be like, oh gosh, are Tim and Josh like hating each other? We are good friends. I love this. You're not a friend of mine unless we have heated conversations about things we disagree with. So this is an endearment here. I want to respond to the statement that Bitcoin's not new tech. On a face value, you're absolutely right. Bitcoin was created in 2009, which means that it's 16 years old now. That's not new. We got a teenager. However, have you heard the expression, both you and chat, that there's a way things evolve when it comes in like this? At first, they ignore you. They don't know anything about you. Then they move to a place where they laugh at you. Then they fight you. And then they join you, right? That is the story of success. Bitcoin from 2009 to 2013, nobody knew what it was. The few people who did know what it was were probably computer geeks, nerds who played on the internet. They saw it on some deep Reddit note, but no one mainstream was talking about it. It was not a thing. I didn't know about it. I don't know. Josh, you're smarter than me, so maybe you knew about it, but a lot of people didn't know about it. 2013 to 2017, it becomes a joke. TV shows joke about the computer nerd who just put all his life savings into Bitcoin. It was a laughing stock. People, even Michael Saylor, talked about how big of a failure it would be in the future. Boy, has he come around. Now, 2017 to 2021, this is where Bitcoin becomes legitimate, but we don't go into they join you. We entered a fight. We entered into Bitcoin's bad for the environment. No, it is not. Oh, Bitcoin is never going to make it because you can't touch it. This digital concept's so stupid. It actually makes it a better form of currency. Ultimately, the institutions flooded and shorted it to keep it from being a big thing. They ignored it, then they laughed at it, and then they fought it. But when I say it's a new technology, they're just now joining it. They're just now saying, this is worth my investment. The early days, it's not like day one of the internet, it boosted, went up. There were people, newspapers wrote articles on how the internet was going to be a fad and would be gone in a couple of years. Cell phones, this concept of having a phone that you could carry around in your pocket at one point was scoffed at. It didn't explode the year it was created. There's a concept and there's a period of how things get adopted. And my belief is that Bitcoin, along with altcoins and the technology future of tokenization and putting things on the blockchain, while it's existed since 2009, it is just now being appreciated by the people that actually have the money to make it go parabolic. That's why I say it's a new technology, not in terms of the calendar, but in terms of adoption.
Well, I loved it. I love that. But I even felt some hope vibes, some hopium. A shot of hopium was coming into the bloodline. Thank you, Tim. I like that. You know, guys, a couple comments I'm just going to quickly comment on. Bitcoin is 112K now. Can you please let me know why you're concerned about 107K? I'm not. And I think that the way that I want you to understand is that every risk you take, and I hope you guys really pay attention to what I'm about to say. Every risk you take, you have to have an entry plan and an exit plan. Unless you're just going long Bitcoin and you don't care if it pulls back to 90, 80, 70, you're just going to buy more and you're not going to sell, which actually describes my position. I haven't sold any Bitcoin, and I've been telling everybody for months and months, for the last year and a half, I said, I don't think I'm going to. I think my days of selling Bitcoin are over. So even if it pulled back to 50K, you say, well, wow, Josh, you would have lost $75,000 per Bitcoin. Yeah. I am a believer in Bitcoin long-term. I believe this is going to be a $500,000 asset. And so, somewhere along the way, you have to shift from just being a trader of an asset, that if you begin to believe in it, you're just holding it, right? And for sure, that already happened for me for Bitcoin. It happened when we were down at 15,500, and I bought 5 Bitcoin between 5 and 30K, right? And when we exploded up above this massive number, I thought, why am I ever going to sell this? I'm not going to swing trade these assets. I'm believing that each of those are going to go to my children, a Bitcoin a piece, or however it all breaks down. $1 million potentially. I'm in it for the long haul. I want to see what happens. I don't need that money. I can swing trade the alts all day long. There's plenty of money to be made swing trading the alts. And if you make a little money, my theory is buy a little Bitcoin. But if that's not the position you are in, and there's any chance that you would sell the bottom out of fear, if there's any chance of that whatsoever, you need to have stop losses and exit strategies. Everybody's going to have a different strategy. And that's why I'm talking about 107, because it also helps me identify buying opportunities. If we do break 107, then I'm going to begin to move some money around because I have a target in mind. What was the target? The 20-day EMA, which is the last line for the bull defense, which would be closer to that 85 to 90K. That's where I would buy again. That's where I would store up some money to buy in bulk again. So the reason why we go over these charts and the reason why I give you these lines is for all the various strategies that you might be developing for yourself. This is not a suggestion for what you should buy, sell, or hold. Me or Tim are not telling you what to do with your money. We're talking about what we've been doing with our money. So I think we're going to leave it right there. If you need help learning the charts and learning strategies of risk taking and profit taking, you can come do that in my personal pro trading community, Chart Goat University. Saturday mornings are becoming the best classes. We're laying foundations for candle theory and for support and resistance and for swing trading and day trading. I have a lot of successful alerts in there, and I've got great crown traders in there. And check out my man Tim Warren's YouTube page. I think he's showed his strength in his understanding of the crypto market. And obviously, I would say, Tim, this is sort of your life's work at this point, isn't it? I mean, this is kind of what you're pouring yourself into, isn't it?
Yeah, I mean, this is the thing. I mean, we like to talk stocks as well, but crypto is our niche. We love to discuss and follow everything involved with it. So it's fun. 5 years ago, if you told me, Tim, you're going to be a full-time crypto analyst, I would have laughed at you and said, what the heck are you talking about? But this is where I am, and I'm loving it. And I'm hopefully going to be here for a while.
Thank you. Rob says, I keep telling you the 4-year cycle is dead. I don't believe it's dead. If I led you to believe that I believed that it was dead, that's not the case. I believe that it has been only diminished in significance. It's a huge, important catalyst, and we'll see how it runs. We have a very strong pattern that is not broken, and the only way that I will believe that it is completely broken is if let me think about this for a minute. To be honest, I think it would be if we break over 50% down, which would be quite easy to do from our all-time highs, and we end up in a long multi-month descending channel, I would believe that the winters are still active and alive. If we hold above the 20 and over the course of the next 3 to 5 months, we fail to break beneath that 85, I would say that the winter is dead and that this is operating as a strong secular trending stock, growth play. So hope that helped. We tried to hash it out as much as possible so you could get a perspective of what we think. I'm definitely a believer in long-term buying of Bitcoin, and I think there are other assets. Ethereum has proven itself yet again. I like Solana, and if you asked me what I was most bullish on, that I expected to get the highest percentage return, it'd actually be Solana, believe it or not. What would it be for you? You a Link guy?
Yeah. I wouldn't say Link would be my highest expected return. Link's going to be up there. I still think.
Well,
Link
let me rephrase that question.
Yeah.
The larger cap altcoins. So the more stable top 15 altcoins. If you had to pick one that wasn't Bitcoin and wasn't Ethereum, which one out of the top 20 would you have the most confidence in?
Yeah. Let me just make sure I know which ones I'm not going to say, because there's a couple that I think are right outside the top 20 that could be interesting. And H-bar is going to be very interesting. So don't sleep on H-bar. But of the top 20, let's go Chainlink. I think Chainlink has the potential, keyword potential to be a top 5 coin by the time this bull market's over. It's sitting at number 11. It's only got a $16 billion market cap. This is one, I think, at least $100 billion. But I just won't be surprised if we get closer to that $200 billion market cap by the time it's said and done. And we're seeing this thing be in argument to be a top 5 cryptocurrency.
Which I'm sorry, I was reading comments.
It was Chainlink.
Okay. I like Chainlink a lot. And it's one of the most bullish crypto charts. And if I had to pick, I would actually have said that Chainlink would probably be there after Solana. And people, I know everyone's going to say, what about Sui? I like Sui. It's got some proving to do. Remember, it's not It's this has not been around a while, so I want to see how it performs over time. I'm definitely going to be buying any dip on SUI for a big move up opportunity there. I think, next time around $7-10.
I think the key I would say is in that Ethereum, Solana, SUI, these are the top 3 layer one. Technically Cardano's above there, but Cardano's it's in a different world. When you look at Solana, Ethereum, and SUI, they might not all be crazy utilized, but one of the 3 or 2 of the 3 are going to be heavily utilized. So it's almost like if you could bet on 3 horses, one of those horses is going to win. And so you're hedging your bets here. SUI will benefit if Solana and Ethereum start to show some problems. If Ethereum and Solana stay extremely resilient and amazing, you might see SUI still benefit, but slip down the rankings. But SUI is almost like your insurance policy, I think. It's a very good project, love what they do, but it's kind of like, hey, if Solana shows any sign of weakness, if Ethereum shows any sign of weakness, watch SUI capitalize on it.
I love what you're saying. All 3 of them. Yeah, that's a really good fundamental view of SUI. It is a backup project, and it's a great development team. I think Solana and Ethereum, they deserve a lot of respect. Couple quick comments. David D, thank you for the super chat. I think he gave me like 10 of these, and he said thought levels for SQQ for September. I hate to disappoint you, but I'm going to tell you that I'm not going to lay out the inverse position plays until we break down. If we break down, I will shed light on those type of positions. But I'm concerned it goes against my premise of trade the trend. My first discipline is trade the trend. And until the trend breaks, which is that monthly on the 5 EMA, until the trend breaks, I'm going to keep everyone's eyes on the bullish narrative and the opportunity. I'll be watching it very carefully. You watch my show, you hit subscribe, you'll hear me confirm that it's time to shift attention. And someone say, well, won't we be in too late? No, we'll be at the beginning of the break. We'll be at the confirmation of the break. We won't be in too late. We'll ride that baby down, but let's not focus on that and put in our valuable money. If you're talking about a scalp, go right ahead. If you're thinking that the market's going to have a bad Monday or a bad Tuesday because of, do what you want. But until the market trend breaks, which is currently bullish, it's wrong of me to put eyes on those inverse plays because people will put their money in there and it'll be nothing but trouble. Appreciate you being on the show. Thank you guys for watching me. Thank you for hitting the like. I look forward to talking to more of you guys in the Stocks with Josh Discord, and make sure that you subscribe to this guy's page. He is a wealth of knowledge, and I thoroughly enjoyed the conversation. I hope to have you back again soon, Tim. Thank you.
Absolutely. Thanks for having me, Josh.
Peace and blessings, y'all.